Good morning, traders from each and every part of the world. You're joining this series of the daily morning market call from. If you can hear me, kindly comment good morning so that we can move smoothly forward. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking investors and traders to the global markets to assess various asset classes and take possible attempts to capture possible profits. Now, on today's series of the daily morning market call, we will begin with our usual procedure of looking into fundamental analysis, which we can find on the HFM economic calendar. Then we will head straight to the charts to see the implication of that. But it has always been our culture to look at unveiling market trends, which is trending in the market, which is making market to move aggressively. And as we all know, as investors and traders, that is what we like to see: market direction, so that we get to speculate on the appreciation or depreciation of various asset classes. But before that, I would like to inform each one of us that this is going to be a pre-recorded YouTube video, to mean that you could find it on our YouTube channel at HFM Kenya. Visit HFM Kenya, subscribe, like, and click on the notification button so that you're not left out in future content that we produce from time to time. Off to fundamental analysis. Yesterday we didn't have much news coming in, which is of the nature of high impact. Although we had German gross domestic product from Japan coming out positive at 0.7%. So we see the reflection of the Japanese economy being better. And this is in line from what we saw in the previous weeks, where we saw the labor markets in Japan also improving, which giving investors and traders a little bit of optimism. Now, on Japanese pairs, this is going to strengthen the Japanese yen, and in context to the currency pair, under the currency pair asset class, we are able to go with the flow or move with the movement. I'm going to see that. Moving into the day, which is the 18th of February 2025, we have the Reserve Bank of Australia announcing their interest rates. In fact, they have earlier in the morning East African time, this is 5:30, which came out at 4.1%, with the consensus at 4.1%, but the previous as 4.35. So we see a 0.25 basis point cut, to mean that the Australian economy was not outrightly doing good, but the Reserve Bank, which is the central bank of the Australian state, had to make an adjustment in the economy, which is have been seen to improve the economy of the Australian state. So they resorted in cutting their rates so as to increase money circulation in the economy, and this is going to have a positive impact on the Australian dollar, of course going to strengthen it. Moving into the day, we have a myriad of other economic data to expect, with Canada Consumer Price Index and London's or United Kingdom's employment change printing out. Our focus today on this series of the Daily Morning Call will be to look at the context of the high impact news that we have seen right now, and got something special on German index, or the DAX, which is German 40, which we are going to see is moving pretty much more bullish than other indexes from different regions of the world. And that would be a signal to go and take a look at it to possibly find opportunities. Let me share the screen. nice. Beginning with German 40. Well, other indexes, let's begin with the US based indexes that we looked at yesterday, that we talked about possible breakout of the higher, breaking out of these high highs here and continuation of a bullish momentum. We see that is currently in play. Not have taken it out yet, but we see we are attempting to take out the high to increase our biasness as traders and investors to keep on getting for the long positions. Going there, but not quite there. German, this is US 100, or the Nasdaq, if you may like, broke the high like we anticipated. Want to see price printing to the upside, much more continuing this long-term bullish momentum that we have been having from way back last year in the year of 2024. We see now stocks and indices or baskets of stocks are back in a bullish momentum, despite the uncertainties in the world brought about by tariffs, the negotiation in the Middle East, the war in Eastern Europe. Stocks are back to being bullish. Quite a rare scenario, but we see a little bit of optimism from investors and traders. Would like to ride along that as investors and traders and getting for the long positions. For US 30, US 30 still trying to break out of the consolidation, but we anticipate the high being taken out and price to proceed printing to the upside. But in another part of the world, this is the European market. With precision to the German 40, we see bullish momentum with extremely high volume. Now, this is quite a unique scenario which would entice us as investors and traders to take a look at it and also consider increasing it in our investment portfolios for us not to be left out from these huge spikes to the upside, which this indicates that the reports from the German stock are coming out positive, which is increasing investors' confidence to buy these particular stocks, which as an index improves on its trajectory in a bullish momentum. Checking out currencies, due to the positive data which came out from the Japanese state, where we had the gross domestic product coming out at 0.7%, higher than anticipated, showing a healthy economy. For US JPY, we see that we are in a bearish trajectory and would like to see price printing to the downside and taking out the loss. But with this particular asset, we would like to be a little bit more cautious because we are anticipating data from the United States, which if it comes out positive, we might see a change in the trend. But as it is right now, we know getting in for short positions would be considered much more risk-off approach or much more safer approach. Very nice. As a disclaimer, this by any chance is not meant for financial advice. This is made purely for educational purposes. Kindly do your due diligence and observe risk management. And if this is your first time to interact with the financial market, or your subsequent time, and you notice that you are having educational gaps that you are yet to fill, kindly reach out, get to hfm.com, attempt to register for an account and fill in your details. Our experts will get in touch with you to allow you get the ball rolling in the financial markets. With that said, you can also get back to your mentor who has led you to this chat box, and they will guide you on the process of beginning. And for the account registration, that is completely free, and until you get to the investment stage where you will now get to speculate on the appreciation or depreciation of various asset classes. Until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. See you guys, and God bless.